Secretary of State, what brings you to this great festival of innovation right here in Hong Kong?
Well, we decided to run the Festival of Innovation in Hong Kong because, as we know from the IMF predictions, 90% of global growth in the next 10 to 15 years will be outside continental Europe. And this is going to be at the centre of that growth in Asia Pacific. So it's an obvious place to have a showcase of what the UK has to offer, particularly in areas of technology and innovation. And it's also a very good place for us to talk about global trading issues, as this is one of the global trading hubs.
Secretary, what about the opportunities it throws up? What about the people here? What interests you have? What about trade and doing trade deals in this part of the world? Where are you with that?
Well, what the festival is collaboration. How do we get collaboration and how do we get the trade and investment relationship between Hong Kong and the United Kingdom on a sound and secure footing for the future? How do we see Hong Kong as a potential gateway into China? Both Hong Kong and the United Kingdom are very service-orientated markets. So what do we think about the global possibilities of trade liberalisation in services? We've seen the trade and services agreement stalled in Geneva now for some time. How do we help to take it forward? So there's quite a big agenda here, quite a big overlap of our interests.
It's a beautiful day here, but there are dark clouds of protectionism on the horizon. How concerned are you about that?
Well, we've been seeing an increase in protectionism for some time. Back in 2010, the OECD estimated that the G20 countries were operating about 300 non-tariff barriers to trade. By 2015, that was up at about 1,200. So we've seen a gradually increasing protectionism beginning to silt up the global economy. We need to reverse that, and we need another round of global liberalisation, and the United Kingdom and Hong Kong are keen to push that.
But the United States, of course, and its administration are a spanner in the works, are they not?
Well, we have disagreed with the US on the implementation of the 232 measures on steel, but we do sympathise with the United States on the fact that there has been overcapacity in steel, and that needs to be dealt with globally. If we're going to have a global rules-based system, those rules have to be followed by everybody.
Well, the United States is going to be one of the key countries that you need to make a trade deal as Britain leaves the European Union, isn't it?
Well, we have a number of areas that we're already working on with the United States for trade liberalisation. When people say a trade deal, they seem to be talking about a traditional full-blown FTA. There may be other ways of achieving trade liberalisation short of that. We've been working on areas where we can make short-term gains by looking at things, for example, professional registration, professional qualifications. There are whole areas where we must be able to find ways of giving tools to manage the global economy that give us more agility and flexibility than we have today.
Secretary, Tim Adams, he's a Treasury official in the US in the Bush administration, saying, look, there's really no need for a big trade deal. It wouldn't make that much difference at the end of the day, anyway, because the economies are very similar, and we've got very low barriers to trade anyway, and tariff barriers anyway. So it should really at the moment also be something that you're looking at, but it's not that important, is it?
Well, you're rather making my point, because you're talking about trade in goods. And people are obsessed with trade in goods. But the United Kingdom, the United States, Japan, Hong Kong are primarily service economies. And it's probably right that there's a limit to what we can do in terms of tariffs, but there's a lot we can do in terms of liberalising global services.
Financial services is one. And how are you at the moment looking at Europe? Where are you with the financial services? Transfer, passporting of services there, that's going to be one of the key issues that you're under discussion with at the moment with your European partners.
I have absolutely no doubt that London will maintain its position of global dominance in financial services. Why? Because we've got a depth of professional service capability that isn't replicated anywhere else. We've got the regulatory and legal frameworks, and we've got the reputation of the Bank of England. They're not easily replicated anywhere else, and on top of that, you're seeing a huge amount of money coming into London in things like fintech, more venture capital on tech in general has come into London in the past year, then into the whole of France, the whole of Germany, the whole of Spain, the whole of Ireland combined, which gives you an idea of London being at the absolute cutting edge of global financial services.
Secretary of State, the Chartered Institute of Procurement and Supply says that nearly 1 in 7 EU companies with UK suppliers have already moved some of their business out of Britain, and almost a quarter of UK businesses are planning to reduce their workforce to offset Brexit-related costs. What do you make of that?
Well, we'll see. How many predictions have we had since before our referendum?
They've said that nearly 1 in 7 have already moved out.
In which case, we've seen record employment in the United Kingdom. We've seen a 3.9% increase in our manufacturing over the past year, 30 quarterly growth in manufacturing. The economy seems to be doing pretty well.
So, do you expect to get some sort of trade deal with the European Union before the transition period?
Well, the transition period beginning at the point that we leave the European Union, what we would hope to see is an early shape to what that final agreement would look like, whether it's finalised or not. What business is looking for during the implementation period is a clear idea of what that future economic partnership looks like. The earlier we're able to give certainty, the better it is for British businesses, European businesses, British consumers, European consumers, and also global investors. And this is a very key point. We have to ensure that there are no barriers to trade or investment after our agreement that don't exist before it, because otherwise it will send a signal to global investors that Europe is less open for business than it is today. That's likely to have global consequences.
Well, banks are fearing the worst, aren't they? Many of them have already started to up sticks and move to European capitals. That's already happening. So,
for example?
Well, we've got Goldman Sachs is already talking about it. They've already got floor space in Dublin, for instance, Morgan Stanley and others too.
Yeah, you see, but Deutsche Bank have just taken up one of their biggest investments in the City of London. They're not putting their money there because they're planning to divest. We've seen UBS, we've seen HSBC saying that they're going to keep most of their people in London and that we're likely to see growth in employment in London. So I don't share this pessimism. Our underlying fundamentals are extremely strong in the UK. That's why we had record investment into the UK in the past year.
Yeah, but what trade deals do you hope to strike, though, during the transition period, if not before? Give me an idea of how many countries you're talking to at the moment and what you hope to achieve.
Well, we've already said that we're talking to the United States. We've talked to Australia and New Zealand. We've begun discussions about a potential future free trade agreement there. We will want to take on the Japanese EPA. That may be a separate agreement depending on how far it's got by the time we leave the European Union. Clearly we'll be taking on Singapore and Vietnam agreements, assuming that they are fully ratified by the point that we leave. And then, of course, we look to other countries where the EU doesn't have trade agreements, with China, with India, with the Gulf, in fact, the world's biggest economies.
Tell me something, do you think that really a country would want to sign anything with Britain before they know what sort of relationship it's going to have with the European Union?
Well, naturally it's something that they'll want to take into account, which is why I say we need to get early sight of what the future economic partnership looks like. And if we can get that before we actually leave the European Union, hopefully by the autumn of this year, that'll be a big help to everybody.
What about the real, when you get down to brass tacks in that transition period, the nitty-gritty of a future relationship with the European Union, a trade relationship with the European Union? Will you be leading that?
Well, my department is not responsible for that, so I don't have any personal involvement. That's the DEXU department led by David Davis that does that. What we will want to ensure is that Britain is match fit for the point that we end the transition period and we begin a fully independent trade policy for the first time in 40 years.
Are you optimistic about these trade negotiations and indeed still as optimistic as you were when you were on the hustings campaigning for a Brexit?
Oh yes, I'm optimistic, and if I was sure that it was the right thing to do when I voted for it, I'm more sure today.